Uh, Hello, everyone. I hope I'm audible to everyone. Am I audible? If someone can put a message. Well, um, I'm also new in this YouTube live, so I'm also not very sure whether I'm audible or not, and how to check that. So uh, uh, let me check. Okay, just probably wait a minute, and then see whatever we have. We will start discussing. Um, okay, so I think I'm just still trying to figure out whether it is visible or not. But anyway, I hope you can hear me. So I'll just quickly talk about a few things that I have been doing earlier, and then probably then I can talk about a few things that I'm looking at. I think that would be really good. So. First of all, I think many of you already know that how I used to invest for a long time, that I haven't actually given any update, right? Like almost I think 3 years back, what I used to do is I used to buy some really good companies which used to have consistent revenue growth and used to have good ROC, right? Like you probably have seen my portfolio update where I used to have a couple of companies where I used to, in fact, give you a very regular update about my portfolio, right? So those are the earlier type of investment that I used to do, but recently I have changed the way I manage my portfolio, and the major reason that I actually shifted my portfolio, like I mean, see when I just put the strategy that okay, I will only buy some consistent compounder and then going to keep it for some time. Uh, I came up with some timeline also. Like if the portfolio doesn't perform within this time frame, probably I'll change the strategy and all. So this is what exactly I have done. The company, I think 10 to 12 companies I used to own in my portfolio, and then I didn't do much. I just kept on hold. What I've seen this, like after a while, the company. Some of the company were doing decently, some of the companies were having not much of growth, so the overall the portfolio doesn't didn't do very well. So because of this reason, I had to change the strategy, because see, one way is like I can keep waiting for the portfolio to perform, and the other thing is like if the portfolio is not performing, I can look for different strategy, right? So I mean, for this purpose, I actually came up with a different strategy, and I was looking for I mean, see, whenever you are making any investment, the whole purpose is to make money, right? So if we do not outperform the index, then what is the point of doing it? But better I'll invest in the in index fund, right? So there is no I mean, there is no so sense absolutely if we just keep buying and then we do not perform well. So with this thought, I changed the investment style. What I started understanding is in our Indian economy, a lot of players are there which are growing in exceptional good pace. And if we can understand those company and can track them well, it is still possible to create some alpha. With this thought process, I started with a very small allocation, and then I gradually, I mean, started expanding the universe. Uh, then what I have seen is like with time, I have seen that the portfolio is gradually performing well. So that is the point I actually started investing more money, and then I was checking if it can be scaled up. And with the thought process, a few things that I have categorized. Probably this is very simple to understand if I just tell one by one. First of all, like you know how the Indian GDP is growing, right? I mean, you almost know that, like hardly 10%, 10, 11 percentage. So like if I want to outperform the index, then I have to do something which is doing much better than the index, right? So with this thought process, I kept a target, like any company which is having minimum 20 percentage of sales growth or revenue growth, whichever that you want to say that. So if a company is having higher than 20 percentage of sales growth, those are the companies that I'm going to study. So this is the first level of filter. right? So in this filter, you can understand I am not very much worried about many other things, like whether it is consistently making 20% for last 5 years or 10 years. I'm not going to check it what I used to do it earlier. So this is one of the change that I have brought in. That is the first part. Check the company if it is making a revenue growth more than 20 percentage. That makes the first cut. This is the first filter. The second filter is check the margin of the company. Like it could be EBITDA margin, it could be PAT margin. So I want my company to grow its revenue at a higher pace, preferably more than 20 percentage, and then I want the company to have higher EBITDA margin. What I mean by that, it's just not higher EBITDA margin that I'm referring to. Basically, I want my company to have the operating leverage. Let me explain. Let's say a company is growing at 20 percentage of sales growth. If my EBITDA growth is more than 20 percentage, this is the case that I'm calling it to the operating leverage. That means the EBITDA margin is growing faster than the revenue growth. This is the case that we are referring to, right? So first cut, revenue growth more than 20 percentage. Second case is operating leverage, and third only I will take the valuation. So I mean, with this thought process, I checked I mean the companies that I can understand fairly well, and then I was checking if it is possible to build a portfolio of earlier I used to have 10 to 12 stocks. So this time I just wanted to broaden the number of stocks. So this time I thought that I will make 15 20 stocks, and then I will see what happens. So I mean, with this thought process, I started building the portfolio around, I think, 2020 24 around. I started experimenting with this portfolio, and to my surprise, the portfolio did very well. I was still very much, very much worried whether the portfolio will work or not. But I mean, this is what I've seen. So I mean, I started reading and going. I mean, see, if you keep this filter in mind, like revenue growth of the company has to be more than 20 percentage, you will automatically move to the sector where your company is growing at a fast pace, right? So I mean, see, I'm not going to share the portfolio and all. So probably a few thought process, I mean, few sectors that actually fits into this thought process I'm going to discuss. For example, like I can give you a name, but nothing is buy or sell recommendation. It's just that I'm discussing how my framework actually fits into the overall scheme of the thought. Now, the first thing is, let's take the example of EMS sector, right? So let's take the example of the EMS sector. So EMS is electronic manufacturing service. So I mean, if you see in this sector, what all companies that you probably can get, you have Sirma SGS, you have Kindness, you have Dixon Technologies, right? You check in this sector, you will find that the company revenue growth is more than 20 percentage. So this is the first cut, and the company actually in this segment fits into the framework, right? So I mean, now if the first cut being made, then the second cut is obviously going to be if the company is getting operating leverage or not. As I said, operating leverage is what? Operating leverage is nothing but if the company is growing itself by 20 percentage, your operating leverage should be, I mean, the operating leverage kick in when your profit growth or your EBITDA growth is higher than the last year, right? So if we see the company in this space, Kindness is there and Cinema is there. These are the companies which are actually growing at a good pace. But if we check which are companies they're actually getting the operating leverage, you will see not many. I mean, I think Dixon didn't get the operating leverage this time. Kindness also didn't get, or even if it is getting, like we have to check the company which is fitting or which is getting the highest operating leverage. So I mean, how to track that? So there is no research report or nothing, like it's not that like let's buy this company and forget about it. We have to check it every quarter how the company is going growing, whether the company is reporting EBITDA growth or not. Likewise, we have to actually check it. And then the third part is going to be valuation. Valuation is something we can never miss. If we miss valuation, then what happens is big accident takes place. This is my earlier experience. So you see, Asian Paint, Pidilite, these are the companies which used to grow at 10, 15 percentage. 15% is very, very high. So 10, 12 percentage, and then I was buying at a P ratio of 60, 70, 80. So for the valuation, instead of looking at PE, the best way to look at what Peter Lynch used to follow, which is PEG ratio. Like, check what is the I mean, PE divided by growth. Like, check the forward earning of the company divided by the growth. So this, the PEG ratio, if it is below 1.5, you can think it like, the company is in the fair valuation. So these are the simple thing that, like this three filter, if I check, I automatically will move towards the company which is having the higher sales growth, which is doing profitability. Because if you see in this whole mode, I am not going to get into the company which is mostly loss making, right, and which is not having cash flow. So if the operating margin or the PAT or EBITDA keeps growing, then eventually the company is going to make money. So with this thought process, I built the portfolio. Right now, I think I'm having around 20 to 25 stocks in my portfolio. What I have realized is, most of the time, like, being a retail investor, what I see, okay, this stock and that stock, uh, more specifically, what makes money is not the stock. What makes money is in the sector. You see that majority of the time, the stocks in the same sector, they goes up together, they goes down together. It may so happen that, I mean, all the three or four stock in the same sector is not going up at the same rate, or it is falling down at the same rate, but you will see a trend. So the whole idea here is not to pinpoint the stock. I mean, find out the sector where you are getting a good revenue growth visibility, plus you're getting the good set of valuation, and obviously you want operating leverage. So the sector that I'm looking at, I'll just read a few sector that, I mean, I'm very closely checking. As I was saying already, like, EMS is a sector that looks very interesting because, I mean, if you just look kindness, for example, they are giving the guidance of almost 3x in 3 years. So you can understand the amount of growth that you can get. But anyway, all the growths are not going to be equated equally, because what happens is, like, growth for the sake of growth is not at all healthy. I mean, it can lead to tumor, right? So here important thing is, like, we have to find out if the growth, if the growth is happening with solid profitability or with solid ROE or ROC, right? So this is the most important part. We are just not blindly chasing growth, we are chasing growth above 20 percentage. We are checking for the operating leverage, we are checking for ROCE. We want the company to move or to increase the ROCE, instead of looking at, let's say, a fixed number. Earlier we used to look at the fixed number, okay, the ROCE has to be 15 percentage, 20 percentage. But instead of that, we are looking for the ROE which is improving. Let's say this year, if ROE is 13, and if I get a better visibility that next year the ROE can go up, let's say 15 percentage, this is the place to be in. EMS sector is one of the sector, and then another very excited sector is aerospace sector. Like, you have seen that last almost 1 year, a lot of companies are actually into this segment, and a major shift is happening in this space, because majority of the company, like, 20-30 percentage growth is nothing in this sector. I mean, companies are there aiming for even better set of numbers. So aerospace is a sector where, like, Ajad Engineering is there, Inter is there. I mean, some portion is obviously in the defense connected. Then AKS is there. Obviously, Sunset Engineering, Ajad Engineering. These are the companies are there. Obviously, we have to check the valuation. See, what happens in the market is, if the market is getting a good visibility, let's say 2, 3, 4, 5, a long-term visibility, then the market rates the stock accordingly, because better visibility, the markets appreciate, cheers it by giving higher PE. So obviously, if you're getting the long visibility, you're not going to get it at a cheaper PE multiple. But anyway, the best way to look here is just check the PEG ratio, like, check the PE. If the stock is in 30 PE, check what is the growth. If the growth also is happening, like, revenue growth is happening 30% percentage year on year, then you can understand 30 divided by 30 is going to be 1. So PEG ratio, any PEG ratio below 1.5 is going to be all right. But here important part is we have to continuously monitor how the company is going to perform, right? So this is another sector. The another very exciting sector, that I am very closely tracking this sector, is EV sector, right? I am just a moment, if I can put it in this and then make it a slide so that I can just give me a moment so that I can work. If I can change and if I can read the comments, it's for the first time that I'm doing so. Probably, I mean, next time when I do it, things are going to be in a much better form. So, but anyway, I think I have to slowly figure it out how things works here, which is all right. But anyway, I was talking about the EV sector. Now, in the EV sector also, there is amazing thing happening, especially after the West Asia war. I mean, you've seen that what happened to the oil prices and all, right? So because of that, I mean, people are moving much faster to the EV segment. The similar thing you have seen during the COVID time, right? The UPI payment was happening at a rapid pace, but because of the COVID, what happened? It got a push, and then it went. I mean, it went in a very bizarre speed, right? It just blitz speed. It went on. But this is the same thing happening in the EV, especially two-wheeler space. So if you see, there are a few companies are there in this EV two-wheeler space, especially if I can name Aether Energy is there. There are two. One is Aether Energy and another one is Aether Industry. So we are talking about the Aether Energy, right? And then we have got TVS. TVS is also having two-wheeler portfolio. And then Bajaj is also having two-wheeler space. Now here, this is very important for us to understand. See, if we just think that the valuation has gone up, the stock has gone 3x 4x, and okay, this stock is going to fall, I think this is not the way things to look at. I think the better way to look at is, do not check the share price right now, see where it can go eventually, because we do not make money what happens in the past. And when we make money, if we have the growth in the future, right, that is when we actually make money. So I mean, let's spend a few minutes on the EV two-wheeler space. It's really amazing what is happening. See, in the TV, I mean, just check these three companies. Aether Energy, it is growing at probably 65 percentage, year on year basis. Look at TVS. TVS is growing at 80 percentage, 80. Can you believe it? One company is growing at 60 percentage, another company is growing at 80 percentage. Take another example. Let's say Bajaj. Bajaj has Bajaj Chetan. Look at it. This is growing at 80 percentage, right? I mean, guys, this is not buyer sell recommendation. I'm just saying how to look at the sector that I am actually looking very closely to understand whether there is some merit for to invest in the sector. So I'm thinking from that lens. Now, just tell me something. If a company, if a couple of companies in a particular sector is growing above 50 percentage, what does it mean? What does it mean? It means there is a huge tailwind in the sector, right? So, I mean, even if you're not investing, at least it is worth paying attention what is happening in this company. Instead of saying, okay, there is no cash flow, there is no ROC, this is a loss-making company. Instead of that, it is much better to change our outlook and think about it what is happening? What is happening in this space? This is extremely important because I mean, if we just look at the share price, this is the most useless things to do. If we just look at the share price and if you say, okay, this is 30% down, this is 2x up, what are we going to do out of that? Almost nothing, right? So better to look at what this company can go 2-3 years going ahead, right? That is a better way to look at it. So guys, if you're attending this session, I'm not able to access the chat, probably hit the like button so that I understand that I mean, you can hear, or you're liking the session. But anyway, guys, so what I was saying is, See, out of all those, I mean, all three companies are looking great. I mean, see, another thing is, I mean, if you think that okay, already it is growing well and it is going to not grow that much as it is going right now, guys, check the con call, read the con call of Aether Energy, see what is happening. This company is having huge amount of demand, but they are not able to deliver this the scooty, right? So you can understand this is I mean, the companies are saying in the con call that we do not have the bike, the inventory days for all the companies 0 to 3 days. What does it mean? As soon as it is sending to the dealers, immediately the bike is getting sold, isn't it? And then all the company, I believe, it will have immense opportunity for the export opportunity. We are not talking about, because in India itself, these companies are not able to deliver. So they are not at all talking about the export. In Indian market, they are not able to cater. So what is happening? All those companies, they are doing amazing amount of capex. Okay, I mean, out of all three companies, I mean, if you see Bajaj or TVS, they already have ICE engine. ICE engine is our, I mean, earlier type of bike. So there is a little bit of distinction here if you just think it this way. See, Bajaj, they have the ICE engine and EV. TVS also has the kind of same thing. But so if one has to grow, it will come at the compromise of the other, isn't it? Because if the more penetration of the EV happens, so you can understand going forward, more and more EV is going to be sold, right? So in this space, you can understand what should happen. What should happen is ideally, like the cell in the ICE engine, it should go down, and the cell in the EV space, it should go up, right? This is the most natural thing that you can expect, but for Aether Energy there is absolutely no other way, because they have only EVs. So Aether Energy, that is why this is the pure play EV companies. But I mean, in this quarter, the quarterly result was amazing, because they were not EBITDA positive, now they're EBITDA positive, and going forward all the company are doing amazing amount of capex, and like the future actually looks really good. So in this, probably I'll not talk so much about a particular sector, but these are the sectors that I am looking at. I'm making investment in this sector, and then also, like looking for a better opportunity in different sectors. So this is a couple of sectors. Probably I'll take one or two names then before I conclude. uh, Another very important space, if you're there in my Telegram group, so probably, like you can join in the Telegram group. If you go to Telegram and just at the rate slow compounding, then probably you will get the link. But anyway, there I have been posting about the microfinance segment for a while. In the microfinance segment also, this is really this is a space where turnaround is happening. There are multiple companies which are actually going to benefit quite immensely, because when the cycle turns, what happens? You move from negative profit to the positive profit, right? So I mean, th- this is kind of the thing that is happening in the microfinance segment. Well, other than microfinance segment, I mean, it's just not that, like I mean, if you track this, if you have only this filter, like check the company which is having 20% of revenue growth and the operating leverage, so probably you will be automatically moving to the high growth engine. But other than that, there is another sector where you can actually play turnaround. But I mean, typically in my portfolio, what I think in terms of the allocation is, I do not want to play turnaround more than 15 to 20 percentage. Rather, I want to, like restrict it there and rest everything like 80 to 85 percentage, that actually I want to move to better high growth engine. So that is how I look at my portfolio. I am constructing my portfolio. So the microfinance, obviously, this is not a high growth space. It is going to be high growth space going ahead, but right now it is a turnaround play. I have already talked about turnaround and about the prospect. Probably I'll make some separate video where I'll discuss about the different company and what are the specific things to look at it. But uh, check kijiye. I mean, this is the space to check. Okay. I mean, in the building materials, something really interesting development is happening, but still the revenue growth is not coming 20% or so. For example, if you take the example of Asian Paint or the Berger, like, by the way, I used to own Asian Paint. I sold it and I put it in the mint. I think on my YouTube channel also I put it, like, around the name of the I mean the stock price, but I've sold the stock a long time back. Now what is happening, something really interesting happening in this quarter, if you look at after, I think, six, not six, I think 8 to 10 quarters later, the building materials stocks, for example, Asian Paint, Berger Paint, Astral, Pidilite, they are coming up with a better growth. Earlier they were degrowing. Now at least they are growing, like, 10%, 11%, 12% growth that they are showing. So yeah, this is not the space, but I'm closely tracking, because if I see higher rate of sales growth, let's say Asian Paint grows more than 20% with an operating leverage, obviously I'll be interested, and then I'll do the valuation. After the valuation and the exercise that I do, if the PEG ratio is below 1.5, probably I'll be interested. Another exceptionally interesting segment, which is which is coming to the filter. I mean, if you follow the filter that I'm looking at, which is the pharmaceutical space. Okay. Amazing growth happening. If you look at the company, those are in this space, especially medicine manufacturing, you see that I mean, basically pharma company doing exceptionally good in terms of, like, their revenue growth is going to be not 10%, 20%. It is going to be straight above 30%. So you can understand that there is a huge amount of traction happening. And when all the company in a sector is growing at this pace, you can understand there is something happening in the sector. Then it is important for you to read and, like, check what is happening. It is not very difficult. Go to screener, check one couple of companies, read the con call, probably management opening remarks. You will understand what is happening. Okay. In this, the major theme is, like, big amount of the patented molecules are going off patent. If that happens for the Indian pharmaceutical company, they get the contract from, like, export company, and they say, okay, you do this, you develop this medicine for me at a cheaper cost. This is one of the major thing actually playing out. There are multiple company, like, if I just take a name of a couple of companies, for example, Quality Pharma. If you look at it, they are giving the guidance, like, the revenue is going to grow by 2x in 3 years. What does it mean? That the company is giving guidance, at least revenue growth is going to be more than 25%. And also they're saying in the con call that, like, there are positive development happening. Whenever there is some positive development happening, we will give you update. Okay, so there is space for further improvement. Now you can understand, you have a choice. You can be with Asian Paint, Pidilite, with 10 to 12% growth, with you are paying 60 to 70 PE. On the other end, you have the company which is growing more than 20%, getting operating leverage, and the growth is not for the sake of growth. The growth is coming up with good profitability. This is the most important part. Quality Pharma is one company, Sucker is another, Shilpa Medicare, then One Sources. These are the company. Guys, look at it. This, okay? Look at these companies. Don't do anything. Just be curious. Go to their transcript, read the con call, check the management commentary. Okay. First of all, check the result. You will see that if the revenue is growing by, like, I mean, for example, Quality Pharma, it has been going by 30-40%. And management this time just open the Quality Pharma investor presentation. You will see that what was earlier guidance, and then how the management is increasing the guidance. Okay. Obviously, you have to do the valuation here. This is what is very important. If you follow this filter, it will automatically take you to the sector where you are getting the maximum tailwind. Okay. And tailwind is something that we want. We do not want to get stuck with the sector where there is no tailwind. This is extremely important. I'll give you an example where there is no tailwind, there is only headwind. Okay. It's just not only that, like, you have to know where the tailwind is there, where there are obstruction, there are headwind is there. That also I'll probably give one name. For last 1 year, you have seen that all the gold financer has been making money, printing a lot of money. Take any name. For example, take the example of Muthoot Finance, take FedFina, take Capigro Global. These are all companies which are printing money in the gold finance. Why? The reason is simple, because what has happened is, the gold price went up. We all know it. The gold price went up. Because of that, like, there is now a better chance that, I mean, see, earlier, whatever gold asset the people used to have, let's say it used to be 1 lakh. Now, since the gold price has gone up quite significantly, let's say it is now 1.5 lakhs, then if I have gold, I'll go to the company and I will say that, okay, give me gold loan. So now the company, instead of giving 1 lakh, company can give 1.5 lakhs, right? So now you can see there is a easy tailwind for the gold financer to make money there, because they are disbursing more amount of loan. That is why you will see that the Muthoot Finance has been making money. Manappuram Finance, Muthoot Finance, Fedfina, all the company in this segment has been making money. Okay. But if you see recently, what has happened is, the first is the gold price has stopped climbing up. Okay, if the gold price stop climbing up, what happens? Answer is simple. If the gold price stop climbing up, the easy runway for the growth is not there, because earlier, whatever grammage or tonnage, the gold company call it tonnage, right? So whatever tonnage that they used to have, they used to bring it, the tonnage value used to increase, right? Now the price has stabilized. I mean, the value of the asset is not increasing. Now, to give more loan to the customer has to bring more gold, right? This is called tonnage growth, right? So now, for the gold financer to make money, the tonnage growth should come up, right? So this is first part that we can check. Second one, recently, this is another thing for the all the lenders, like, they have to abide by the rule of the RBI. Now they have, for the gold financer, the new rule has come, like, earlier, if somebody is having an asset, let's say of 1 lakh, let's say somebody has a gold chain of 1 lakh, will come to a lender, and then the lender will assess, okay, fine, this is 1 lakh worth of gold. Let me give, I mean, there is something called loan to value. Like, if it is 1 lakh amount of the gold chain is there, instead of giving 1 lakh, the gold financer will give, okay, take 80. I mean, instead of 1 lakh, the gold financer will give 80,000 rupees. That's what it is, LTV, it is called. That means 80% is LTV. That was the earlier case. But now, if you look, RBI has rolled out a new guideline. What this new guideline says, that earlier only the loan amount used to be. Now, loan amount plus interest should be 80% of the LTV. Now you can understand what is happening, right? So obviously, the amount of loan growth that is going to happen, that will slow down. So this is some sector where there are not, I will not say headwind, but this is some sector to at least keep an eye, not to increasing the allocation going ahead, right? So this is very important for us to understand. So equally important, which sector is to avoid, that also is very important. Let's say if somebody is holding Muthoot Finance, you have seen that from the top of the chart, what happened to the lender, right? Then I have already mentioned that the microfinance is a great company, great sector to play. The second one is going to be, obviously, like, in this space, it could be like, the NBFC's company, which are disbursing loan at a high rate. Probably, I'll make a detailed video on NBFC and all, like, how am I looking at the sector. Anyway, so let's move, like, another very very interesting sector we have, which is the hospital sector. You will see that a lot of interesting thing is happening in the hospital sector, because you'll see the slow, I mean, probably, we will not talk about the slowest growing company. If you look at the company which are growing at a spectacular pace, Max Hospital, look at it. Then, I mean, this quarter, if you look, Narayan Hrudaya, the growth rate looks very high, but it's basically because of the acquisition that they have done it in UK. But, like, if you see, there are some companies which are growing at a really good pace. For example, take the example of Yathas Hospital, Park Medi, or some Ayurvedic hospital is also there, which is growing at, like, 20, 30, 40% of rate. So these are the sector. If these are the company, if they're growing at a very high pace, obviously, we have to check the operating leverage, and then we have to check what is the valuation stance. If it fits, that's how, like, we have to check. I mean, probably 6 7 sectors. From each sector, you can take the market leader, or like, anything which is actually making sense to you in terms of the valuation, and build a company of 15 20 stocks, and then periodically monitor how those companies are growing. I think this is a very easy strategy to outperform the market. Now, the retail investor, I mean, I should not say retail investor, because I mean, I also used to have the same problem earlier, because see, the problem was, we used to think, okay, we will buy this company and we will hold it for 10 years. Well, we should be investing for long term, but we should be tracking the company. If the company keeps performing, we will keep this company in the portfolio. You will see that this company keeps executing, right? Uh, the most important and the most powerful thing that we have is, let's say a company is not performing well, right? We have always got the chance. We will always get the chance to sell those companies, and then if we track enough companies, obviously we will get a lot of good other opportunities we can directly purchase. So this is how, like, being a retail investor, if somebody plans to direct equity investing, I think this should be the way to go. Because if we are doing active investing, it's better to actively track those companies, and obviously select those set of companies which are having I mean, which is growing faster than market. I mean, in that sense only we can say that, okay, this company can outperform the benchmark, right? So anyway, I think there are many other companies or many other sectors to talk about. So probably we will not keep this long. We will make a lot of short videos, so that, like, with time we can cover the maximum sector possible. That will probably help us to broaden the universe, and then build a good set of portfolio. Now, I will not directly share my portfolio here, but, like, I'll talk about the sector where I am actually looking at. I'm doing the hunting and I'm actually making some changes. Let's say if I'm moving away from a particular sector, which sector I'm moving to, those details I will talk about. So I think that will also help you to read different things, and start tracking different things. It will give you a better understanding about the process. So I mean, I have learned that, like, okay, certain things is not working. I have changed my model, the way I used to manage my portfolio. This is my new way that I'm managing for last 2 3 years, and my actually the performance has been quite satisfactory. I mean, I think for last 2 years, where the Nifty 50 has been completely flat, my portfolio has gone up by at least 26 to 27%, which is really remarkable, right? Obviously, like, I'm not saying that this is going to go forever, but, like, this is what I have to do. I have to continuously check it. If something is not working, I have to check why it is not working, and accordingly reshape my portfolio so that I become relevant. Instead of holding out to our old thought process, okay, let's do buy and hold and let's become Warren Buffett. So instead of that, I think if something is not working, we have and we should and we must have the flexibility to move, and then like, change the way we actually see things working. And obviously track your result. I have a telegram group where you can join if you have not already joined. I'll probably give the link. I mean, if you go to the homepage of this channel, you will get it. So time to time we will keep doing the live session. I mean, this is the first session that I have been doing it. So anyway, we will stop it at this point, and probably, if you if you have any questions or anything, probably you can put it in the comment section. Next time when I come for the live session, I will take your question and then I will try to answer if I know something. See, I do not claim that I know everything, but, like, the limited sector that I am covering, if it is falling in that pitch, probably if it is improving, it is not improving, if it is something to avoid, something to look at, I'll focus in that, and then I can give you some clarity, or at least I can share some certain things which can help you to take some decision here. Please understand that here we are not giving any buy or sell recommendation. It is just that, how am I managing my portfolio. I'm going to share my journey. This has been the whole motive so long. That's what I'll continue to do that. So with that, we will stop this this live session. So thank you everybody for joining. I hope to interact with you much more with the live session going forward.